very warm welcome. It's such a treat to see you all here, and you are also for a treat because this event is not just inspirational, it will challenge you, but it will also give you some absolute brilliant pointers of what to do and how to look at corporate VC. So without further ado, as we are slightly behind schedule and the speakers are absolutely phenomenal. So like I keep saying, you are for a real treat. So we are going to start with a phenomenal panel about mobilizing institutional and corporate capital for venture. And the panel is going to be led by Alexander. And then we're going to have Kambis, Stefan and Matthias. So please give them your warm welcome.
So good morning, everyone, from my side and our side. I hope you had a good start in the morning. We're extremely pleased to kick off the second day of the Venture Mindset with this esteemed panel. We're going to talk about the fund of funds, the Tibi plan and beyond, mobilizing institutional and corporate capital ventures. My name is Alexander, and I'm a partner at AKELA Law. And happy to introduce, maybe starting from my left to right, Matthias. Matthias Leibetseder, he's a senior investment manager at WaveX, which is the VC arm of Walter Group. Did it right. And WaveX is an early stage investor in logistics, mobility, manufacturing tech, property tech, and construction tech. And Matthias is crazy about development and driven by innovation. Stefan Fürnsinn. Good morning to you. He's executive director at ÖBAG, but also he's a co-founder of 𝘋𝑫𝐤, a startup focused on photon-based quantum technology. And thus, Stefan knows both sides of the coin, investing money with ÖBAG, but also raising money as a co-founder with 𝘋𝑫𝐤. Last but not least, Kambis, in his venue, basically, as Kambis is the head of startup services and the deputy head of founder services here at 𝑘O, the Austrian Economic Chamber. But he's also, similar to Stefan, a founding part of several startups, so he's deeply rooted in the startup scene and has gained significant insights. So please a warm welcome to the esteemed panel. The hot topic we hear about. The first question is, how do we get private and institutional capital invested into venture capital? Lately, there's been some movement in Austria as the new Austrian government proposed to establish a new fund of funds, Dachfonds, which has been a request from the startup scene for quite a while. The fund of fund foresees, with some other points, the involvement of the European Investment Fund and other public anchor investors, and also some guarantees to back it up. The question is, did the Austrian government hit the spot or miss the point? And maybe to be fair, we don't know much about the fund of funds at the moment, but to give some more details and comparison, in France, we know about the Tibi plan, which gives some tax exemptions and also some benefits for capital investment, and also maybe the German Wachstumsfonds. So there are some models, they are established, they work, especially the Tibi plan. So Stefan, first question to you. In your opinion, how do we get institutional funding into venture capital? And will the fund of funds model entice pension funds, banks, insurances, and even foundations to invest?
Yeah, that's a very easy question and not so easy to give a short answer. I think my top-down short answer would be, I think it's a good step, but it's not enough. Yeah, so I think if we start a bit with the backdrop, I think where the government is right, that we need to do something. Yeah, if we look at Austria is and I think it applies a lot also to Europe in a bigger context. We are very good in the science side. Austria had 2 Nobel laureates actually in the last couple of years in physics. We are very good. We have very strong corporates. We have a actually very strong, maybe at the moment slowly growing, but a very strong economy. But what we're lacking is particularly sort of the ability to scale startups and to bring the intellectual capital that also comes out of the scientific side into value in the sense of GDP, revenues, employment, and so forth. And if you look at, I mean, Draghi report is probably widely known. If you look at Austria, where is the opportunity? I think we're doing reasonably well on new startups. Yeah, so if you compare new startups to GDP, we're actually a bit behind the US, which still is our benchmark. But when we really see the gap is in the scale-up phase. Yeah, we really get sort of startups to grow, and I think that's also where the whole corporate link comes through. So the whole scaling of innovation, that's where the issue is. Now, if you look at the fund of funds, and I'll try to keep this one reasonably short, I think it's definitely important to add capital sort of on the top, because we can mobilize capital. There are many companies that are not actually invested, so there's a lot of potential for capital. That's the supply side. However, I think it's very important to work on the demand side as well. So we need to have funds below that create an ecosystem, and we need to have the scale-ups that actually demand the capital, because otherwise there's a risk that the money just goes abroad. So I think it's an important step, but it should be seen as a broader initiative that hopefully will be orchestrated.
Thank you, Stefan. Kambis, maybe adding to the last point Stefan mentioned, because part of the Fund of Fund initiative and maybe the creation of venture and private equity hubs, meaning that Austrian branches of international funds via AWS or Förderbank shall be established. Is it a smart move in your opinion? And maybe you have also a take on the Fund of Funds.
Yeah, thank you. The other panelists actually mentioned the Draghi report. I just wanted to set a focus here as well, because this report, I think people don't understand how relevant this report is for political institutions in all of Europe. So if someone from the practice in the venture capital scene demands, let's say, a funds of funds model or tax incentives and so on, then we in the community, in the tech and startup community, we actually say, yes, that's true, that's how it works, but that's not how the political institutions work. So it was very important, and someone like Mario Draghi in specific launched and published a report like this. This actually pushed a lot of developments, which we can see now. Now, the funds of funds model is one of the instruments, I would say, in a well-shaped, well-working startup ecosystem. It's not the only thing that is needed. I mean, capital is very important, and I can tell you, there was an IMF report years ago comparing US and European productivity growth in companies, and around 2005 we were quite equal, and then actually the US went up and we went down. And this was due to the fewer numbers of new companies, startups that actually grew fast enough and became large tech companies. They are actually driving productivity growth. And this is due to the lack of funding in each stage. So it's around 70 to 80%, whether it's pre-seed, seed, Series A, there's a lag between 70 and 80%. It's not just Austria, but all of Europe. So capital is very important, and the funds of funds model is one of the important instruments. And the thing is, now in Austria, it's not such an easy situation, because we have budget deficits. A lot of money was spent in the last couple of years during Corona and so on to support companies, people, and so on. So there is a deficit now, and the question is how we can set up a new instrument that actually is about more capital. And in the end, I believe, regarding the funds of funds model, the Austrian government doesn't even have to actually budget it right now in the very early on. Why? Because one of the possible models to do a fund of fund model is just to cover the liability in terms of default. If you already give this kind of guarantee in terms of default, then this can already mobilize private capital, but also capital by bigger, let's say, financial institutions, banks, pension funds, and so on. And this can come all from Austria, and they again start investing into different funds that are existing or newly ones that are created. And they don't even have to be just in Austria. They can be actually in Europe, because in the end you need to diversify your portfolio as well, so that actually that it works out. That's one thing. So there are models which you can use for the fund of funds model without even touching the budget right now. But in terms of default, it might be possible. But that's actually, I think, the way to go. And there are good signs that it will be implemented and expectedly in the next year, not this year, but next year, 2026. Apart from that, we're talking about also other tax incentives. For instance, what we try to do is like to have a model like in the UK or France, wherever, where there are where investments in venture capital in startups are incentivized. You know, by, for instance, tax exemption, by reducing and so on. It didn't work out. We were pushing it, like the funds of funds model. It didn't work out, and I would say, just to be very blatant here, I believe because this kind of instrument is being seen as something that is made for the wealthy. Yeah? And yeah, from different points of perspective, this makes sense. Yeah? Okay, giving those who already have money, investing another taxes, I'm sure reducing the taxes, and that's why it didn't work out. But again, the funds of funds model is a major instrument, but it's an instrument. So it's part of a well-shaped, well-working ecosystem, and one of the instruments we need, but not the only one.
Thank you so much. Matthias, part of the Austrian initiative is also the so-called Transformation Fonds, Transformationsfonds. Could it be an additional pot to what Stefan and Kambis mentioned to support Austrian startups? Or in your view, how do we create change or actual growth for Austrian and European startups?
Yeah, I think the main problem that I see in corporates in general, perhaps, is not that corporates don't want to innovate. It's just a risk topic. So they have well-running business units that produce their money where they can choose their bets. So why should they choose a bet that is high risk and high intensity of work they have to put into? So everything that helps us de-risking those topics, de-risking venture capital investments for the corporates, is getting them into the game even quicker. So if you can prove it through a fund of funds, through the transformation fund, okay, if you invest in that, the Austrian government is behind it, and you have a certain lever on the security of the topic, then it's easier to deploy money into that, as the company has to justify to shareholders, owners, or whomever is concerned. So that's where I see the biggest advantage of the fund of funds, as well as the transformation fund, because there is willingness, and I think for now, every management has understood that times are changing a bit quicker than in the past. So there are not years anymore until new products are developed with AI tools. It's weeks or days even. Yeah.
Great, thank you so much. I'm glad that Kambis mentioned the Draghi report already, because the second question is circling around innovation, which you already mentioned. So the European Draghi report by Mr. Draghi, released September 2024, if I'm right, and it identified innovation as one major challenge for European economy, which then also relates to startups. And the report mentions that roughly 30% of the EU's unicorns at some point relocate abroad, mainly to the US. I mean, to be fair, this maybe changed now under Trump, but has been so far. And the report goes on to say that it's mainly due to regulatory, financial, and training barriers. So definitely we're losing too many startups, especially the important ones, after the initial stage. The question is, what else can we do to make them stay here, and is financing the main point or not? So Kambis, I want to start with you. Would you agree that we need to create a more, let's say, call it convenient environment for startups to flourish in Austria?
So I would say this applies to Austria and Europe. What do you need so that startups can actually flourish? You need access to talent, you need access to know-how, you need smart regulation, easy foundation process, access to capital, but also access to markets. And you can see the data that too many actually scale-ups and good companies relocated to the US in later stages, but even in earlier stages. For instance, there are startups who say, okay, I want to access angel investors very early on in the US, and I want to actually expand to the US very early on. And that's why I may have found it here, but let's make a Delaware flip, where I then have my headquarters in the US, where the US investors already invest very early on in pre-seed. But Particularly later stage, you can see this, bigger companies, bigger startups actually relocating in the US due to different reasons. Regulation is one thing, capital is the other thing. So what's the goal of many startups? I mean, to grow, to have a valuable product and so on. But at one point, they want to sell. Maybe not everyone, but actually a lot of the startups. And if you want to sell, how can you sell it? Or how you can make big money out of it? Either you make a secondary, or you, for instance, go to the stock exchange. So regarding now the stock exchange, if you take a look, European IPOs versus US IPOs, particularly when it comes to startups that reach a certain level, the activity in Europe for startups going for an IPO has decreased, and some of them actually listed on US stock exchanges, even if they were from Europe. Because why? Because more access to capital, potential more growth, etc., etc. So one thing apart, let's say, of this kind of funds of funds model, this can also be something on European level, whereas we have something like this, like for instance the EIC is doing stuff like this. But I think it's still they could be more open to risk and not too risk averse. But think about if we somehow the stock exchanges in Europe are fragmented. What if we can, for instance, align them and actually put them in whatever way more together, and actually this way to create a much more attractive and bigger stock exchange market. This would be one reason for startups also to stay here and not list in the US. That's for instance one of the things. So harmonizing the capital union as well in Europe.
Interesting. So in the European sense of mind. Matthias, being a senior investment manager, what do you think is needed to keep startups that are scaling their business in Austria and maybe Europe for long term?
I think deregulation would help quite a bit, as we're just finalizing an investment in a company in Germany that went from the start to the US, because there they can set up the company within 2 days, and in Germany it drags them weeks along to open a GmbH. So they had the holding placed in the US and then did the German GmbH after that. So everything that comes to paperwork and filing and such would be to be eased up a bit to make the process easier and to get people also more motivated to get involved in entrepreneurship, I think, in order to really start something, because I think that's the first barrier they have if they are thinking of starting something. Oh, damn it, there is an avalanche of regulation then coming along. For Austria as a place in Europe, I think Austria is very well situated. We have always been the gate to the east, so we can use our historical position there and also try to connect East and Western Europe there pretty easily. And we have a great pool of talent that is drawn to Austria through the UNO and other institutions and multinational corporations. So talent, I think, is something that is easy to get them here to Austria. It's a beautiful country, so at the end of the day, we need an easier setup in terms of taxation, regulation, which helps, and obviously there need to be clients that are willing to pay for the services the startups provide, so that will be a big advantage. And then not as risk-averse investors as we have in the moment, where I take myself into that. We're corporate venture capital. We have a very strict mandate, so to say, in what we can invest in and where we invest due to our backers, so to say, and there the fund of fund obviously eases the pain. If there is more money in the market, more money can be deployed in risky topics, and also growth capital. So as Andreas, former Unica Ventures, is now forming his team for growth capital, I think there is a lack of Series B+ financing in Europe, and that's why many then switch to the US to get the big bucks.
Thank you, Matthias. Stefan, you know from your roles both as investor and as a founder, do you believe that incentivizing early stage investments by business angels or through seed capital, as well as involving maybe also the European Investment Bank, are part of the solution here, as the Draghi reports states?
I think everything can be part of the solution. I think we need to, I mean, the gap is large enough to play a lot of levers. Yeah, so I think I wouldn't leave any out. I'd like to build briefly first on what was said. I think I agree, talent is not our issue. I think also not technology. We have amazing technology, great new science, it's all there. I think where we struggle is maybe on 4 sides. Yeah, this one is capital. Yeah, why capital? Because funding rounds are much bigger in the US. Early stage funding rounds are bigger in the US, and that de-risks the later funding rounds, and that gives you the opportunity actually to prove more. So I can even say for our startup, I would say 50% of conversations with investors said, well, let's go to the US. Yeah, that was the first thing, yeah, because we can get a twice as large ticket. Yeah. So we need to do something, and I think I think fund of funds can be an element, yeah, but I think also, as was mentioned, mindset and many other things. Second, where I think have an issue is regulation. I agree. Maybe in the setup of the company, I think the bigger issue is even later, yeah, which is incentive for employees to participate in shares, the whole tax issues, which I think FlexCo has done a lot of good things, but actually one of the key pain points was not addressed. Yeah. And many other regulations, if you think how complicated it is to register a new employee, how many tax and hour monitoring you need to do to be compliant, I think most startups don't even know, luckily. And I think the other thing where we have room to improve is, I think, on the market dynamics itself. Yeah, Europe in itself is a more complicated market. It's more languages, it's different regulations, yeah. Cultural diversity, which is good, but it's not easy for a company. The US is easier. It's usually a couple of states, yeah, mindset, yeah. So, but here we have another lever, and I think that's the connection to corporates, yeah. And this is something I think we discussed yesterday, and I think I'm a big fan. If we could link every startup with a couple of existing dynamic great companies where they plow ahead together, I think we have so much more potential that we could leverage. And I think so it takes a holistic approach. Maybe we add society, yeah, just make startup and innovation a bit cooler. Yeah, the pandemic unfortunately showed us that there is deep skepticism into technology, science, all the new things. Yeah, I think so. There is also something politicians should probably work on. And your question on the early stage. Yes, as I said, I think early stage, very early stage, I think we are outstanding in Austria. I think AWS, but also university support. I mean, there are many things on the very early stage. I think in the seed and the large seed rounds, I think that's where the issue starts. And as I said later on, so I think focusing only on the early, I think is not doing the trick.
There may give you an example on the mindset issue on valuations. For example, we tapped into the trap some weeks ago. We saw a logistics AI agent that does routine calls for transport managers. We saw that a US company, the tech impressed us quite heavily, but they only had 3 clients, very little traction. So we were thinking, okay, how should we evaluate this? Should be 1-digit million valuation somewhere. While we were thinking about it, A16Z came along, gave them 15 million and valued them at 100 million. So without a real traction and anything placed around that. And there we were just like, okay, then it's too big for us to play with them. So that's a bit also on the mindset topic. So there is a difference in the mindset, how they approach those topics.
It's very interesting. Thank you so much. Moving on to our last topic, and you already all 3 mentioned it a bit, is about risks. And it's also like kind of a topic here at the Venture Mindset, like overcoming risks and having a mindset for a failure and just doing it better again, standing up. So investments are, by its nature, risky. Investors accept those risks because they see a potential upside and reward. However, especially here in Austria, we tend to see only the downside and the negative effects. So Matthias, starting with you this round, would you agree that Austrian is like too risk averse? And do you think that Austrian investors lack the risk appetite? And what do you believe could be a solution here? Are you willing to take the risks? And as investor, have you done so already? I mean, you already mentioned it a bit, you're limited by the corporate structure, but generally.
It's something that I see with myself quite a lot. If it's a logistics topic, I did 12 years of logistics operations. I tend to judge too early if it's a good startup or not, because I have a bit too much expertise in that field. So I'm not completely neutral when judging it due to my own experience. And I think there, with the risk-taking and forward-looking, Europe is very much based on history. If you go to a European city, you want to see the history, the ancient stones that are lying around there and that are impressive and everything that built us. But that makes us more risk averse towards the future because, okay, that's uncertain, that's certain, that was there, that happened, and that's all. And what gives us a kind of regulation, a kind of a good feeling. So that's where I see where we have the problem in mindset, again, to look forward, to be a bit more pushy. And also, we don't have the need, as we're rich countries. We were all born in a good situation here in Central Europe, at least. So we have everything at the end, and you can make a pretty decent living without a lot of pressure. So there I see an advantage in Latin America and other countries that are pushing really hard, that are hustling their way through life in order to make a living, and where they have that need still a bit more than we have here in middle of Europe.
Can I
Please,
add
please.
something? I think because this resonates a lot. I would say Europe takes the biggest risks in the world. We're the most risk-taking because we don't do much. And I think the risk of not doing anything is bigger than being wrong in doing something. And I think we have not realized that doing nothing is actually the biggest risk. And I think if sort of betting, like we discussed last night, betting on new things, being prepared, having foresight, being sort of ready for a changing world is reducing my risk. I think it would fit our mindset better. Yeah? And I think that might be the starting point.
That's a very interesting take, Stefan. Thank you so much, Matthias, also. Kambis, for you, is the fund of fund going to close the risk gap? And will it attract usually risk-averse investors such as pension funds, banks, and so on? And as a founder yourself, would you be happy if investors were taking bigger risks to get bigger rewards?
The short answer is yes. I think we are too risk-averse in Austria, but also in Europe. That's the short answer. I mean, there are always two sides. You can also say, for instance, we have, let's say last year we had like 7,000 new foundations in Austria, which sounds high, but if you compare it like all over Europe, it's still in the lower third. But on the other hand, we have less failures as well in terms of like company failures and so on. It has been growing, but still it's way less than other countries. So you can also see both sides, but in the end, I think we're too risk-averse, and it was very good what my co-panelist mentioned about that's actually the biggest risk that we have, that we are too risk-averse. In the last decade, a lot of the focus was on defending and preventing, because think about all the regulation that was coming. I believe for the first time now in the last 10 years, that the mindset here has changed actually in Europe, even the institutions, and you can see this push. And I'm not so negative, I'm more positive now, even though I have been big critics and so on in the last years, but still what I see, there is really movement now, because they have now understood it, starting from the Draghi report to the people pushing and demanding more to do. So I'm not so negative, actually. I'm more positive. And yes, we're too risk-averse, but I think it's going to change now.
I think that's the right mindset to being less risk-averse. Amazing. Stefan, last but not least, maybe now speaking from your company, founder end, do you wish that investors would take bigger risks and just believe in the startup, or are financials numbers the only driver here?
I think you probably need an investor who believes in you, yeah, because otherwise it's not a linear journey, right? It goes wrong more often than not, yeah. So, and you need somebody who partners with you, believes you. I think what we might also have to learn more as the startup community is to actually tell bigger stories, yeah, to think bigger in the vision, to I think overcome this a little bit. I mean, it's too easy to say from a mindset. I think that there are many nice YouTube and other sort of comparisons of US and European pitches, where sort of Europeans say, yeah, I think we have 3 customers, we might have 5. Once we have 10, let's talk again. And the others say, we're going to fly to Mars, yeah, no problem. Obviously, they will not, yeah, but I think it shows something in the mindset, yeah. And I think there is also, as I said, capital is demand and supply, and I think the startup community should be encouraged to actually tell a bigger story. And maybe what we can do on the investment side is ask for a bigger story. I mean, if you see a very technical pitch, say, thank you very much, come back in 2 weeks and tell us something. Could you change the world with this? Yeah, could you actually make a bigger difference? Because that helps the investor test also if there is really something in there. So I think we all should dare to think bigger. And I think you mentioned something that I agreed to. I think it's amazing actually that the Draghi report, that the guy still is alive. Yeah, if you had said 10 years ago, it's all wrong. Yeah, but it was a wake-up call. And now is, I think, the moment to say, yes, Europe can change the world. We can shape something. The US is helping us, interestingly. Yeah, but yes, we can claim a situation where, yes, we can make a difference. But we need to tell a bigger story, and we need to think bigger altogether as an ecosystem.
I would also agree. Thank you very much. This basically concludes our questions, which leads me to thank you again, the esteemed panelists. It was amazing. You, the audience, are there any questions from your side to the panelists? Yes, please.
So did I just get it right? So not publicly subsidizing VC, but let the mark speak itself. That. Yeah, I understand. I mean, there are different models, different approaches how you can set up something like this. So the thing I mentioned in the beginning, it's not like, so when it comes to the funds of funds model, for instance, it's not that the government or the public is spending money right from scratch. We're talking about taking over a liability or giving guarantees, so meaning there is not actually money invested somewhere, but due to this model, this will mobilize more capital, usually. You can see it with other countries. And this is not like giving money, but just giving out a guarantee, and this will mobilize more capital so that different types of institutions, banks, etc., who are private in nature, or private-public, depends on the structure of the company or organization, will start leveraging more money. I mean, so the thing is, this is not something that is not known, because you see a lot of different countries with different models. You can see what works in Estonia, in Singapore, in the US, etc. I just don't think that you can take something and copy it one-on-one from another country, let's say the US, to, let's say, a European country, because the whole economy is, and the mindset and the culture and the institutions are structured in a different way. So we need to also somehow adjust it to the local setting and how things work here. But it's not that I'm telling you that we need to fund more, even more from the public side. With public grants, early stage, that is the case. Yeah? That is the case. So in Austria, it's actually also based on data, one of the leading nations worldwide when it comes to early stage public funding, which is interesting and attractive for investors because it takes or reduces some of their risk early on, because there's done research, product development, and so on. And yeah, you can argue, is it good, for instance, to use public money, for instance, for this kind of product development research? Also here, there are different models. You can also say, let's switch a bit more into guarantees and taking over liabilities, which again could mobilize more private capital. This is the way I think it will go in the next years, but let's see.
And just adding on that, I think there is a trickle-down effect. So if we start with the government, with the professional VCs, there are venture capital clubs, angel clubs and such, like Gateway Ventures, Core Angels. However, there are platforms online where they propose you to invest with them, so to say, and they then create the company that invests in this specific startup. So if we have more money in the system, even those ability or possibilities will get wider spread, and there will be more offerings to the end customer where you can enter with 500, 1K or something-ish tickets in order to participate in an investment round. But that's a typical trickle-down effect from my point of view.
And maybe I'll add also something which is maybe surprising for somebody who's managing 30 billion of public assets. But I think we should have at least government as possible. Yeah, and the question is, and that's I think also where this fund-of-fund model, but all other activities is why is the private market not happening? Yeah, and I think can we address the bottlenecks? There's some regulatory things that can be addressed. That's the most elegant. It doesn't actually cost anything, but it can incentivize private capital. And then I think the other one is that it's on the risk side. Ironically, in Europe, there is still a mindset that, well, if it's government money, it should be no risk. Yeah, you could also see the opposite, right? I mean, who else would take the risk? Yeah, and if you see what other countries are doing, obviously in Asia, but also in the US on things that are very broad, they double down actually on the risk side. And the third thing is, you mentioned it also, is the ecosystem. The public dimension should be, can we actually create an ecosystem? Can there be more GDP growth? Can there be more ecosystem? Yeah, and can there be capital available? Maybe by having larger capital also in the different funds for doing events like this, for bringing investors to Austria, for connecting sort of the startups, for connecting the corporates. So, but I think it should be very wisely chosen, yeah, because otherwise you could also just throw the money out of the door. Yeah. There's unfortunately a track record of misinvestment, yeah, but we should do better.
Thanks so much. We have room for one final question.
Yes, on the right-hand side.
Yeah, please. Yeah.
Yes, I'm Jan from Project Frame. I think, Matthias, you halfly answered my question already. So we are funding our seed round with 𝘋𝑬𝑚𝐴 here in Vienna. So this is, basically the smallest step you can go. But what is your experience about the role from funding platforms like 𝘋𝑬𝑚𝐴? We are working with another one in Estonia, for example. So how much do they contribute already?
I think, first of all, you need capital, so you will get capital from those platforms. As a VC, I don't see them as a threat. It's more a tool for startups to identify with whom do I want to finance my next growth step, and then I need to reach a certain growth step to be interesting for the next point where I can then consider, do I want the corporate VC? Do I want the professional VC from that angle? Do I want some strategic investors? So it's always, what do I need in which stage? I just had a friend, she produces non-alcoholic wine and was looking for VC investors, and I led her also to Conda because I said that's a consumer product that will do great on Conda, and you have less liability in your cap table at the end of the day if you use such an instrument than having a VC there and consuming 10, 15 or some-ish % of your cap table. Yeah. So it's always, what do you want to reach? What is your next goal, and where do you want to go with your company? I mean, not everybody is building a startup. Some people just want to build a mid-sized company, which is also great. But consider the tools you have at hand and use the right one.
Do we have, yeah, there was a question there. Yeah, please.
You mentioned earlier the 𝐬𝐬𝐷𝐵 report, also the risk appetite of the investor. I think a great combination where you can do the trick in Austria and Europe is to add securitization, what 𝐬𝐬𝐷𝐵 said to the fund of funds, because if you create a leverage of 10, 20 times, so basically you let the hedge funds take this 5% first loss piece, which is the highest risk, of course, the highest reward. Then the government or AWS can enter the next 5% or European Investment Fund. And then you can let the senior part where the risk is low to the public, related to the previous question. And then you have the right combination and you do the magic, simply increasing the volume 20 times with the same money given by the government.
Yeah, I agree. Yeah, makes sense. Yeah, totally.
Then a question. Agree fully.
Okay. Thank you so much. Sorry, we're running out of time. If you can take it to the break, maybe then. Right. Thank you very much, Matthias, Stefan, and Kambis. Thanks so much. Thank you, audience.